Good afternoon, gang. Good afternoon. Good evening, good morning, or good night, depending on where you are in the world when you're watching this. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. It's just for educational purposes only, and it's my view of the markets. Now we've got all that crap out of the way. Let's take a deep dive into Bitcoin, shall we? So, before we get started, I want to give you guys some free information, some free alpha. Because specifically on the last few days of price action, this has caught a lot of people off guard. Okay, this is very reminiscent. This year is very reminiscent of what's been happening here, what's been happening here. Okay, we saw it here. Okay, now by that, what I'm not talking about is I don't think that necessarily this is going to roll over just like this did. Could do. It could do. We don't know because we don't have a crystal ball. But I'm talking about the type of price action, especially when we're zooming into a lower term time frame. Okay, so I was posting about this on Twitter yesterday, but I've done it a few times about this. And that's what's going on here. This kind of environment is what I call a slow bleed. Okay, so what I mean by that is effectively it's struggling to do anything. We're struggling. We're just making lower lows and lower highs. It's as simple as that. However, when you are zooming into smaller time frames like the 30-minute or below, you're seeing market structure breaks. Now, what that's doing is it's enticing people in. And I'm going to point my finger at ICT fanboys when I say this, because yesterday was a classic example of where people that trade purely from price action or looking at candlestick patterns, this is where they're missing out on the additional edge. And what edge am I talking about? I'm talking about order flow. Okay. And specifically in this case, I'm talking about TPO. Because this has really saved me and my members a hell of a lot of money over the past few days. Now, what do I mean by that? So I'm going to use yesterday as an example, but we've had the same example here and all the way through this. But I'm going to use yesterday as an example. So every low that we made yesterday was what's considered a poor low. So what does that mean? Well, without going into too much detail and boring you guys to death for an hour, it basically means that we don't have one of these pretty green bands at the bottom of the profile. Okay, here, that's not a green band at the bottom of the profile. That's a set of single prints. We had a buying tail here. We had no buying tail here. We didn't have a buying tail throughout the whole of yesterday until the last 30 minutes before close. And then we didn't have one all morning until now. It's the first buying tail we've had in a long time. Now, how is this relevant? How does this help people? So I'm going to zoom in now and I'm going to talk about, let's use yesterday as an example. Okay, so we had yesterday. So throughout this whole process, I'm telling my guys, I'm not interested in longing unless we see a really big sign of strength and ideally flush out the lows. Now, I'm going to use this part of price action as my example here. Okay, so I'm zoomed in on the 5-minute chart, and this is what obviously a lot of ICT style traders do. And I'm not just saying ICT himself, because at the end of the day, the supply demand style trading, ICT didn't invent it. You know, he's just remarketed and rebranded a lot of the basic crap that's already been out there for years. But I'm not going to go into that rant. Okay, so what you'll have is you'll have times like this. So you can see here, looking on the 5-minute chart. So we had a low, then we came back up, failed to break the high, and then we came back down and we took the low. Okay, so a lot of people will be going, right, okay, we've grabbed liquidity here, great, now, cool, we're looking for that market structure to change, and then once that market structure changes, let's get in and let's long it. And then we'll take it back up to wherever resting liquidity is hiding, whatever concepts he teaches these days. Okay, now, you can see here what's going on. So, you know, if you're using the 5-minute chart, fair enough, you know, let's use this as your local high. So this was the low, this was the high. This was the high that caused the new low. And then what did we do? Well, we came back up and we broke it. We back tested it and then we continued up. Okay. So therefore, by any method that you use, that's a market structure break. So therefore, what do a lot of people do after a market structure break? They wait for the pullback and they try to get in on the pullback. Now, once again, I'm going to point fingers at ICT because it's dead easy to do. Some people will be using order blocks to try and get back in on. Some people will be using fair value gaps to get back in on. Some people might be using the bottom order block to get back in on, whatever. Again, it makes no difference. It makes no difference. And I just like to caveat all this by saying the concepts that ICT teaches can work. However, they lack data. And that's the point. They lack data. You can significantly improve your edge using these methods by understanding order flow. Now, what do I mean by that? Well, I'm saying to the guys, here's our Twitter, just as the example. I'm saying to our guys, after that market structure break, I'm still not overly excited about this move up. We've still got a poor low on the day so far. My guys know I'm not interested in longing this, even after a market structure break. Okay. Now, how do I know that the ICT fanboys were longing within this? Well, I could see it. Okay. I could see them getting involved. I could see the aggressive market orders coming in on these moves. Okay. I can see all this data. This is the beauty of this. Don't get me wrong, it's not perfect, because no data is perfect when it comes to trading, but we can see where the aggressive longs and the aggressive shorts, people getting stopped out, we can see all this. This is the beauty of footprint data. Okay, that's why it's the biggest edge that I have in my own trading. Now, what happened in the end? We moved up, we came back down. Yes, we got a nice bounce. We came up, we didn't take the highs, and then we rolled over. And the probabilities for this day to end up coming down and clearing out the lows were very, very high, which meant as much as you could have caught one of these moves to the upside, and if you were smart enough, lock in some profits, then the odds were not in favour of longs within this. I'd argue shorting wasn't really a great option either. There might have been some opportunities to short, but there's nothing high probability within this for me. All I'm watching now is I want a good low on the day. And what happened? The day progressed and it took the lows. Okay. Now it's the exact same scenario with what happened back here. We create poor low after poor low after poor low. What happens? We just run the lows. Create poor low after poor low after poor low. We run the lows. We created a low. We came back down this morning. We created a poor low then. And then what have we done? We've run the lows. And that's the edge that you can get. So when you can understand how to read this data and read this data, you can significantly improve your chances of a winning trade. Okay, so hopefully you've learned something there. If you have, do me a favour, hit that like button. And if you're not subscribed, consider subscribing. Okay, or if you are a massive ICT fanboy, tell me I'm a arsehole down in the comments. I really don't care, because yeah, everyone's got their own opinion of it. Anyway, moving forward, what's next? What's next? Okay, what setup am I looking for next? Well, first and foremost, here's the range. You guys have known we've had this range on for God knows how long now. I'm kind of bored of talking about it, but it's profitable, so I'm not going to complain too much. So we've got the volume profile. So obviously, following on from last week, got the move down, we've got the deviation of range lows, and obviously this is what we're talking about in the time on last week's video. If we do reclaim the low, then we've got a long opportunity. The long came up, front run the EQ and the point of control, and it started rolling over now. So for me, this is key, what happens next. So let's talk about downside first. Will this low hold because we do have a buying tail? It might do. It might do. Is it a high probability long for me? No, it's not. What would I like to see to long? Well, realistically, let's be honest, it's just range lows. You guys have seen how I trade time and time again. Okay? The highest probability trades are the outer bounds of a range. And yes, it's a high time frame range, and that might mean waiting. But that's something you really need to consider as a trader, about being patient and waiting. Rather than taking low probability trades within this kind of price action and taking multiple losses in a row, why not wait for your higher probability trades? Okay? That's what you want to do. So, if we come down, again, I don't know, got no crystal ball, if we come down and we get some sort of bullish reaction at the lows, we create potentially a good low on TPO, we see maybe some aggressive shorts in here and they start getting absorbed, or quite simply, we have a nice big flush out a load of people, anyone that longed this, anyone that's been longing all this, flush them all out, then start to change the market structure, then yeah, happily I'll get involved. Great, cool, we'll look for a long. Where's that long going to come up to? Well, first and foremost, we're going to look back up towards value area low. We can now pull this along because this is updated, so we'll drag this along the whole thing. There we go. So first and foremost, if we get a move, then we can look up towards value area low. If we get acceptance into value, that starts increasing the odds of coming higher, obviously. Next, I'll be looking at this high. If we are going to take this high, then I'm going to be looking back at the EQ / point of control. And then the big question comes here. Do we get above the point of control, reclaim it, then head further up? If we do, great, value area high. Get above value area high, and effectively this sticky zone above, you can see here in the volume profile, we've got high volume nodes here. Then we can start talking about overall highs. Okay. Now, flip side of that is, what if we don't come down lower and it just starts heading up from here? Well, not a problem. We start heading up from here, get back into value, head up, then first and foremost the same levels. EQ / point of control. What happens here? Do we get above it? Start rejecting and coming back down? Great, cool, short trigger. If not, reclaim it, looking up towards value area high, / the little zone above, because that's where the volume is. Okay? And then the same levels above. Now, once again, I'm going to reiterate this. If we come up to the highs and come out of the highs, I am not going to long here. I don't long breakouts, just like I don't short breakouts to the downside. If this comes out of here, I'm not going to short there. Because we've seen time and time again that breakout trading does not work. Look at everyone that traded this, tried to short this breakdown. What happened? Well, they just got stopped out and then squeezed. Simple. Okay, just like up here, this could come over, back under, and it's just a swing failure pattern. It's just a liquidity grab of the stops above here. Okay, if we do have a legitimate breakout, another reason why I wouldn't be longing that is because, as I've been saying to you guys for months now, 77 to 78k zone here is key for me. If you can flip that 77 to 78, then we can start talking about 80k. But we do have a big zone just above us. Can't ignore that zone. Now, what about downside? What if this range really does not hold if it comes down and we break out? Well, quite simply, once again, it's the same concept as I've been saying for weeks and weeks and weeks. Volume profile from the low to the current high. Where's all the volume? Where's the point of control? It's here. Around 51.5. Realistically, you've got the old range. So you've got your old range highs here. Call it 53 for easy numbers, down to your old range lows here, which is about 50k for easy numbers. If that fails, then I'm looking back in this zone here. You can see exactly what I'm looking within this zone, within this range. Okay, simple as that. Now, once again, hopefully you've enjoyed today's content. If you have, do me a favor, spam that like button, and until next time, gang, as you were. Bye bye.